I'm sure you've heard by now, the IRS has taken a 40% haircut across the board under Donald Trump's administration. Well, I'm here to talk to you why high-dollar tax fraud may be more dangerous than ever. Many taxpayers and their advisors are immediately reaching the same conclusion. That means I'm less likely to be audited. For taxpayers with legitimate and maybe even aggressive tax positions, that may be partially true. But for taxpayers that have engaged in willful tax fraud, the reality is far more complicated. A smaller IRS does not necessarily mean less criminal tax enforcement. In some cases, that may mean the exact opposite. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA, and for more than 25 years, my team and I have represented high-income taxpayers, business owners, investors, and professionals from both civil tax audits and from IRS Criminal Investigation Division matters. At present, we have 23 offices in 11 states to serve you nationally and internationally with both civil audits and criminal tax investigations. Today, I'm going to explain why IRS staffing reductions, what they actually mean, why fewer civil audits does not necessarily reduce criminal tax risk, and which taxpayers in particular should be paying the closest attention. Well, first of all, it's a myth that fewer agents mean less criminal tax risk. It can mean more. Listen, that assumption sounds logical. Fewer IRS employees should mean less enforcement across the board. And to a degree, that's correct. Civil audit rates have declined, particularly for taxpayers that have legally supportable tax positions. But criminal tax enforcement operates completely differently. IRS criminal investigation, known in the industry as CI, has never relied exclusively on routine civil audits to find criminal tax defense targets. In fact, only 7% of cases CI investigates come from civil audits. CI's priorities are completely different. And, unfortunately, so are its investigative tools. Civil audits and criminal investigations follow completely different paths. Traditionally, some criminal tax cases have begun as ordinary civil tax audits, roughly 7%. A revenue agent comes along, identifies significant discrepancies, they consult with an IRS tax fraud specialist, and the matter sometimes gets escalated to the IRS criminal investigation folks that have a 90% conviction rate. But today, many high-risk cases are identified through entirely different sources than the civil audits are. Where's that coming from? Third-party reporting, Bank Secrecy Act filings, whistleblower information, payment processor data, cryptocurrency reporting and John Doe summonses, information from international information sharing agreements, and increasingly, advanced AI-driven data analytics, which is really scary. In fact, 96% of criminal tax investigations historically begin without a traditional audit ever taking place. Fewer audits are creating what we call a triage effect. One of the biggest things we're seeing happening out there is what many criminal tax defense practitioners are describing as the triage effect. We've noticed when civil resources become even more limited, the IRS cannot examine every questionable return. Instead, it triages and focuses on the cases that appear to be most significant. Those involve large dollar amounts, multiple tax years, false records, hidden income, employment tax fraud, ERC fraud, cryptocurrency reporting evasion, or concealment of offshore assets and its taxable income. The result is definitely fewer routine audits, but a greater focus on the cases that most likely support criminal tax prosecution. You get it? AI-driven data analysis has completely changed the game. Currently, modern criminal tax enforcement depends much less on random selection and much more on information availability and analysis. Today's IRS receives data from financial institutions, payment processors, brokerage firms, international reporting systems, government agencies, both domestic and foreign, and from third parties. The information the government is receiving can be compared at lightning speed via AI against the tax returns that you file. This can be done without requiring a revenue agent to manually review anything. AI technology allows criminal tax investigators to instantly identify fraudulent tax compliance matters that once required months of traditional auditing to identify. So, which taxpayers face the greatest risk here? Well, not every taxpayer faces the same criminal tax exposure risk. Someone that uses legitimate tax planning and can support everything they've claimed via accurate records. Yeah, you're going to benefit from lower civil audit rates. But taxpayers who intentionally concealed income, failed to file, submitted false ERC claims, diverted payroll taxes, hid offshore assets and the income associated with it, or failed to report taxable cryptocurrency activity should not assume that the staffing reductions have made criminal tax detection less likely. The exact opposite is true. Why? All of these issues remain active criminal tax enforcement priorities. Well, waiting may be your biggest mistake here if you have this type of exposure. Some taxpayers believe a smaller IRS gives them more time to sort things out. That assumption can be flat out dangerous. Many criminal tax investigations begin because of things like suspicious activity reports, third-party reporting, whistleblower disclosures, cooperating witnesses, or, a lot lately, automated AI-driven data matching. Those events do not depend on whether a revenue agent happens to select your return for audit. Waiting around for an audit notice that never comes to fix your tax situation may mean you wait until your best options to return to compliance without facing criminal tax prosecutions have already disappeared. So, what should business owners take away from this video? The real lesson here, if you get nothing else out of this video, the IRS has not really become weaker. It's that their focus has become narrower. Yes, routine audit issues may receive less attention, but high dollar, high impact, willful tax fraud continues to receive substantial investigative resources. Understanding which category your issue falls into is far more important than assuming IRS staffing reductions protect everyone equally. So in closing, if your tax situation involves unreported income, undisclosed offshore accounts, fraudulent employment tax issues, fraudulent ERC claims, unreported cryptocurrency, and other areas that are being actively targeted by the IRS Criminal Investigation Division, folks, whatever you do, don't assume that fewer civil IRS employees means less criminal tax exposure. It doesn't. At the tax law offices of David W. Klasing, our dual licensed attorneys and CPAs evaluate high-risk tax matters through both the civil and criminal tax defense lens. We analyze third-party reporting, bank records, return history, cryptocurrency activity, offshore reporting, employment tax filings, and we're going to look at all of the civil and criminal voluntary disclosure options that are available and determine your safest legal strategy to return to compliance before the government locks onto a criminal tax narrative. At that point, 90% chance you're going to jail. Call 1-800-681-1295 or visit Klasing-associates.com to schedule a confidential, reduced-rate initial consultation today. Why? Because fewer IRS employees may reduce routine audit activity, but they in no way limit the criminal tax risks that matter most. Dave Klasing, tax attorney, CPA.